Good evening and welcome to Business Live. Coming up, professional services firm Deloitte forecasts average inflation of 11.9% for the Ghana going into 2025. Also, the Chamber of Oil Marketing Companies push for construction of pipelines to transport petroleum products into neighboring countries. This and more coming up. My name is Winston Taki. We're back with more. Now we'll bring you the currency market, but before we do that, professional services firm Deloitte is forecasting a further decline in inflation in 2025 due to a more stable cedi and falling domestic prices. According to the leading global firm, inflation will average 11.9% next year. The following report has more.
Ghana's inflation declined in 6 of the 11 months so far in 2024, thanks partly to the effect of high interest rates. As of November 2024, the country's inflation rate was 23%, a far cry from the government's year-end target of 15%. Ghana's 11 months of 2024 inflation average is 22.85%, down from 2023's average of 40.28%. Deloitte West Africa revealed this in its sneak preview of 2025. It explained that the declining trend is projected to continue in 2025 at an average of 11.9%. This is still above the upper band of the Bank of Ghana's 8% plus or minus 2% inflation target. It added that a more stable cedi easing domestic food prices and warning supply-side pressures will contribute to the projected decline in Ghana's inflation rate.
Meanwhile, Associate Director of Deloitte Ghana, Dennis Brown, emphasized that the incoming government's development policies calls for a balanced approach in handling both revenue and expenditure challenges to create a needed fiscal space.
I think, of course, as a government would do, they will tout their achievements, seeing the growth that they've posted and all that. But I don't think anybody should be of the view that we are out of the woods yet. You know, it's slow, but sure, we are still in the woods. There's still high inflation, around 22%. Exchange rate is still high, although it's stabilized over the last 2 months. So those pressures are there. And so it's true that an incoming government is going to inherit these pressures and would have to deal with it. I mean, it requires careful steering till we come out of the woods or out of the IMF program. I think the incoming government have also mentioned that they are going to look at whether there is room to renegotiate the IMF program. As to the components that they want to renegotiate, we cannot tell whether it's for more money to get off the program sooner than expected or to create space for certain homegrown policies to be, roll out. We await firmly to see how they are going to proceed on that basis. They have their own policies, some brilliant policies when you look at the manifesto. In fact, two leading parties, when you look at their manifestos, it tells clearly that they understand what the challenges are and they know the policies to roll out to deal with those challenges. Normally, the issue is around the rollout or implementation of the policies and how it's guided. Now, with the IMF program in place, the IMF does not provide any restrictions on the rollout of homegrown policies per se. I think what it does is to encourage measures that increases revenue and moderate government expenditure, right? And so the restriction comes in where you now want to roll out certain homegrown policies, which of course will cost money and therefore will impact expenditure, but perhaps may not result in immediate impact. Then your fiscal space is immediately impacted. So that balancing act is what they need to pay attention to. One, how to innovatively generate revenue, create more space for them to increase the various policies that they plan in their manifestos, and that eventually should lead to some growth. I think it's the balancing act for me, considering where we are in terms of being on the IMF program and the fiscal targets that we are expected to achieve whilst being on that program.
Now, the governor of the Bank of Ghana, Dr. Ernest Addison, has disclosed that he inherited a challenging banking sector that had the International Monetary Fund already recommended strict reforms, including the revocation of the banking licenses of UT Bank and Capital Bank. The following report has more.
So when this outgoing government took over and tried to bring the IMF program back on track, there are a few requirements which the IMF calls the prior actions. You have to do this, you have to do that, you have to do this. Otherwise, you are not even going to organize a board meeting to discuss Ghana and, disperse, any funds to you. And guess what? One of the prior actions was to resolve UT and Capital Bank. The Ghanaians had never, or they hadn't seen that in a long period of time. So, obviously, people were shocked when the licenses of those two banks were, pulled. I remember the bankers' dinner that year, because there were quite a few other banks who were also sort of borderline cases. You could hear a pin drop in the room and the tension. But some of you who are here, I'm sure will recollect those days. So we've come a long way, trying to clean up the system of weak and insolvent banks, sort of bringing in new capital requirements to strengthen the banks.
Now, to help us throw more light on this particular statement, we are joined on Zoom by economist Benjamin Amoah. Welcome, sir. Are you surprised that the governor disclosed that the revocation of the license of UT Bank and Capital Bank was a strict requirement as part of the IMF conditions in 2017?
Thank you very much. If you follow the press statements that the central bank released during the banking sector cleanup, the central bank kept raising points such as corporate governance, liquidity support that some of the banks had to request for, especially for UT and Capital Bank. The central bank talked about then insider trading and insider dealing that some of the directors of the bank were engaged in addition to bad or poor loan management by the banks. So if indeed some of the banks were relying on liquidity support back then, before 2017, then it clearly meant that some of the banks that had their licenses revoked were severely challenged. Hence, they had to be supported and to be managed until there was that big push from IMF to get them having their license revoked. Now, of course, you also need to understand, because at that point in time, Ghana was under an IMF program and we're going into an election. The previous government, then NDC government, wouldn't have had that will to liquidate banks before an election. So from the political strategy point of view, it was, let's hold on, let's go through the election, and then if we win, we'll carry out some of these reforms. Unfortunately, the NDC government lost the election, and the NPP government took over in 2017, and they had to strictly go by what the dictates of the IMF was then. So clearly, if you go into the pressure and the reasons for the revocation, it was indeed true that some of the banks were relying on liquidity support, and hence they were not in good position to have their license still being given to them.
All right, Doug, do you think the entire banking sector cleanup was carried out because the IMF actually requested for it?
Around that time, non-performing loans were high, and some of the banks were indeed struggling in terms of operations. And as a central bank, if you have banks that are having difficulties, you don't want to keep these difficult or struggling banks in the system because of the contagion effect that it can have on the entire banking system. So clearly, with the central bank having the details of the extent of trouble or the extent of difficulties within the banking sector at that point in time, there was a need for some form of, cleansing or some form of reform to take place. What they did was to increase the minimum capital. One of the conditions was to increase the minimum capital from 120 million to 400 million. That was one of the strategies to build the muscles or the balance sheets of the entire banking sector at that point in time. As we speak now, we may even have to revisit that particular decision and increase the capital base of the banks again, looking at what has happened over time and the fact that price levels have increased and the CD has weakened over time. So it is indeed true that there was a need for the cleanup to take place.
Okay, the governor also said that the cleanup exercise rather strengthened the banks against external shocks that came as a result of the COVID and the Russian-Ukraine war. With the amount of money spent on the banking sector cleanup, do you think the governor is somehow justified?
See, before COVID, yes, that argument would have been made that the banking sector was, very strong. But no, COVID actually didn't cause a lot of harm to the banks. If you look at the banks, what really dealt the big blow to the sector is the domestic debt exchange program that has led to an unprecedented loss of over 60 billion for the central bank itself. And as we speak now, the central bank is negatively capitalized. So in terms of the banking sector itself, if you look at the foreign banks, they are okay in terms of, financial strength. Some of the local banks are even okay. But for the DDEP, so the point is that if you are talking about the state of the banking sector now, if you do a back of the envelope calculation, in 2016, let's assume that we have 26 banks because 7 of them had their licenses revoked. If you look at the exchange rate at that point in time, 26 banks without the ones that had their licenses revoked, we are talking about a back of the envelope balance sheet of about $754 million. Now, 2024, with the exchange rate at almost 15 Ghana cedis, we are talking about 23 banks with a balance sheet size in dollar term of $625 million. This is just simple. I'm just using the 400 million on 23 banks. I'm not considering other factors and other capital that will be available. But clearly shows you that as we speak now, the banking sector, in terms of capital, 400 million, is not as strong as it used to be in the year 2016. So we need to revisit that particular discussion again and see how best we can support the banking sector.
Doc, finally, you're talking about revisit. Let's assess the 2024 economy by your assessment, performance-wise. Now that we are getting into 2025, what outlook will you say based on inflation, based on policy rates, and basically normal food prices on the market?
For now, many of the things have not changed fundamentally, and so we are going to be on this trajectory for some time. What we'll be expecting, which will happen, is that when a new government is sworn in, because they also have their own set of programs, it is very possible that they will revisit the IMF program and then look at how best the IMF can accommodate the new program into the scheme of things that we are having now. And then see how best some of the reliefs can be loosened to accommodate the current the current IMF program, considering the new government initiative and what they want to do for the economy. It is from that point in time that we can have a fair assessment of how the economy will change when the new government is sworn in. But currently, as we speak now, what we have is what we have to deal with. Hopefully, going forward, when the fundamentals improve, we are going to see some stability, especially on the foreign currency front, and then maybe some reduction in inflation, and then also some reduction in interest rates going forward.
Dr. Abedjimo, we appreciate your time here on Business Live. We'll take a short commercial break. We have more update from you from the Central Bank. Stay tuned. Welcome back to Business Live. My name is Winston Taki, and now to more news. An advisor at the Bank of Ghana, Dr. Steve Opata, revealed that the central bank initiated the issuance of the Ghana gold coin using 7,000 ounces of gold from its reserves as part of a domestic gold purchase program. The Bank of Ghana officially launched the gold coin as a new financial instrument to expand investment opportunities for the public. Dr. Opata shared this detail during an interview with Joy News.
Gold coin as part of the domestic gold purchase program, the evolution of the domestic gold purchase program. Mind you, this is gold that we bought from traceable and responsibly mined source that we have refined. And because of the hugely successful domestic gold purchase program, we have the capacity to use some of the refined gold to manufacture the coin. The first set, I think we are using about 7,000 ounces to manufacture. If we didn't have that gold, we couldn't have done that. So see the gold coin issuance as part of the domestic gold purchase program. Because we have, I was just telling a group that we've built up our gold reserves quite a bit. So this portion we are using to manufacture the coin is just a small portion, but it's also part of the domestic gold purchase program. And I think I must use this platform to also say that the gold that we are using to refine and manufacture the coin is from traceable and responsibly mined gold. We know which mines are giving us this gold to manufacture the coin.
Now, away from the financial sector, the Chamber of Oil Marketing Companies is making the case for the construction of a pipeline to transport petroleum products from Ghana to Burkina Faso and other neighboring countries. The Chamber believes that this will reduce the carnage on the roads as well as making movements of the product more efficient. Speaking exclusively to Joy Business, Chief Executive of the Chamber, Dr. Revocation, charged the BoG Oil Storage and Transportation Company to engage the government of Burkina Faso and other neighboring countries to begin the process of such a massive infrastructure project.
It's easy. BoG has procured pipes. They've procured enough pipes to do this. Is there demand? Yes, there is demand. Why can't we do it? Today, when you look at our 2024 analysis so far, you see how fuel supply to the neighboring cities within the northern part of Ghana has increased. Some to an extent more than 1,000%. Diesel and petrol is increased with the explanation from the regulator that it's the neighboring countries who come to Ghana and buy and go back. Because there's demand. I see a lot of BRVs from Burkina plying our road from Tema. Most of the accident caused on the Kumasi-Accra road by these BRVs are not only Ghanaian BRVs. So if there was a pipeline, that would work. Even if not from Tema, we can do it from Bupe and then pipe it to Burkina. Yeah, I mean, it will help all of us. Firstly, it will cure something we call the fuel diversification. Because once we pipe it and it goes straight into the Burkina market, there's no fear of an OMC or a BDC buying fuel with the intention to supply it to the Burkina and bring it back to the market here, because there's no tax on it, because we have that experience. So once it's piped to Burkina, go to Burkina and bring it back, and you pay the taxes there. We're going to curb that. We're going to curb having so much trucks in the street or on the road of the country causing accidents, and that will help in terms of economics, intra-regional relationship.
Now, the Ghana Hotels Association is on beat about the regulation of the Airbnb business in the country by the Ghana Tourism Authority. Ahead of the Christmas festivities, President of the Ghana Hotels Association, Dr. Edward Akanyamike Jr. said the regulation of the business will ensure fairness and enhance competitiveness between players in the hospitality industry while ensuring that the standards are adhered to.
Marketing, and of course, plus some strategic partnerships with some tour operators, partnership with some car rentals, partnership with corporate bodies. These days, a lot of the corporate bodies have gone into some MOUs with the hotels, and so the corporate annual parties that they host, they take it to the hotels. And then also the hotels are stepping up their customer service for periods like this. And also the decor alone itself, it's attractive for you to want to have your program there. So they are doing all these things to ensure that their clients come to them. But Del, before you go, let me quickly chip in this. I'm sure you read the 2023 GTA report, which sort of attributed some of the accommodation to the Airbnb, which we've been talking about. I'm very happy to say that the GTA has finally come out with some regulatory process for the Airbnb.
That's
which
interesting.
means that going forward, there's going to be some regulation of that space. It will take time to ensure that whatever applies to the hotels also applies to the Airbnb, but at least it's a good start. Because last year, it was around December that we got that information that the Airbnb are taking some big chunk of our clients during the Yuletide. Okay, so I'm happy that some regulation is going to that space so that there can be a more competitive and fair grounds for all of us to provide accommodation services to clients.
That's all for business. My name is Winston Taggy. For more update, visit myjoyonline.com for more business-related stories. As you can see, revocation of licenses of UT Capital Banks were a strict requirement from the IMF. So have a good business day. Bye-bye.